we're delighted to have my friend Chenglu Jin here. I met him a number of years ago in Ireland when he was a graduate student in UCD, having done his undergraduate in mathematics in China. And then we subsequently met up a number of times in China at conferences, etc. He works at the Zhejiang University of Finance and Economics, where he's fairly well tied in with the very strong internet and e-commerce ecosystem that the Hangzhou area possesses. His talk today is going to be an overview of the 7-year itch, which I think is a nice approach to it, and certainly shows his favorite movie star. So without too much ado, what I will do is I will hand over to him. I would also note that we have present Professor Nathan Hill. Nathan is the director of the Trinity College Center for Asian Studies, and he and I are putting our heads together about how we can best increase knowledge and awareness on both sides of the fence, as it were, given especially now that the Trinity Business School has very large numbers of Chinese and more generally East Asian students at postdoctoral, doctoral, and master's level. So without further ado, I will shut up. I will let Suan hand over the virtual microphone to Chenglu, who will give us a talk on 7-year itch.
Thank you, Brian, for inviting me here, and also thank you, Longton, to organize this. And today I'm going to discuss the topic, which we discussed with Brian before, and he asked us to say a broader overview for the internet finance or fintech or AI in China, given it's developing very quickly now. So today I prepare a slide, and hopefully which I can give a very broad overview, and if you have any interest, we can further discuss that. So the whole talk might be about 30 to 40 minutes, and I hope the more discussions will come. Okay, as Brian mentioned, that the title for that is 7-year itch. Why I give that one, because usually we say a 7-year itch, it's actually a relationship term, and Brian definitely mentioned this one was the superstar. And it's a relation term. Usually after 7 years, people tend to evaluate their relationship. Actually, I was longer than 7 years now, so we know that hopefully some of you were in the relationship, and you know that you're from very hot, very sweet, and then you're going to say very stable, or sometimes even have some negotiations or even some debates on some topics, and then we developed it in the future. So it's 7 years. It's not necessary to be bad. Everyone have to experience it, but it's very happens to the internet finance in China, which lasts about 7 years. So from 2013, the first year of China's internet finance area, why we say that was the year, because the year Yuebao, it's given by the Alibaba Group, was launched in 2013. So usually we mark that year as the first year. And from that on, thousands of platforms, companies, individual institutions goes to this area and pay a lot of attention to different areas. Then to 2020, not suddenly, from 2018 actually, from 2018, the P2P platforms get some troubles, and then 2020 November, it's eventually falls to zero. The overall amount of that was about 5,000 platforms. It eventually goes to 2020 as a zero. So that's whole year, and even after that, in China, it seems like less talking about internet finance. Then we shifted to fintech. So before we talking about fintech, it's necessary to know what's left from the internet finance in China, and why the fintech or any AI or big data can develop well now in China. So first, two interesting figures to share with you. The first one is actually a Baidu index, searching index, which is very similar to Google search. And when I type in just internet finance as a thing, it gives us like a line. It goes to very top, reach top to about 2016, and then it approached to almost zero back to 1920s later. And very interesting, when we go to another search, we call the CNKI search, which CNKI is actually the China National Knowledge Internet, which shows all the publications or literally like the studies in this area when I put internet finance in. And very similar, like also it has some lagged, but also it reached top about 15, 16. So which means no matter what's individual Chinese people or it's the scholars, researchers, they have this kind of pattern. It's a 7-year, like they starts from 2013 and ends about 2020. So from then on, we're going to discuss why, what left from the internet finance. We did some research in internet finance ourselves. So some of the slides today comes parts of our studies. First, we know like internet finance, when we say it, it's actually the internet technology plus the financial mode always showing in this way. But when we pay different attention to different parts, it gives different results. Like most developed countries, like in States or England or Irish, they may put more in technology. Like even day back to 2005, the first P2P from Zopa from UK, and then goes to 2006 to the States. But in China, most focus on the second term, the financial modes. So there's a lot of innovations of financial modes, and those innovations related to some risky innovations. So that's the first difference, like special development process. And because of the development process, the leapfrogs to some developments in developed markets. Whatever we can show very briefly, like the online shopping, of course. Amazon, of course, that's the first, the largest online shopping now in world around, but in China, we have much more. The famous one is Taobao, and it also belongs to the Alibaba. They have a Tmall, and also the Jingdou group. I don't know if you heard about that. And even after 2006, there's another newcomer coming as a Pinduoduo, the left button side, the right button side. It's a new online shopping mall, but even developing very quickly. That's the first online shopping, of course. But online payment, that's even more famous now and gives more data and foreign impacts in Chinese behavior. That's Alipay, and or plus the WeChat, we have our payments as well, other third-party payments. The overall amount that even 50 times than those in the States, like the people or the amount who use the online payment. And also something we don't mention it, it's a P2P, it's a peer-to-peer lending, that's online lending. The Lending Club was the first one IPO to the market with the online lending. It's in the States. It was about 10 billion market size. Then it reached about, in 2017, it's only have about 10 million or 1.5 billion, like that. But Chinese markets in about 2017 reached to about 6 trillion yuan. 6 trillion yuan, the rate is 107 for the start. It's just like about $1 trillion. So which was the huge differences and huge amount of people using that. That's definitely one special left for the future fintech. And the second, what's a special left is the special investors and customers in China. Why we say they are special? I graduated from UCD in 2017, and I come back in 2018. Before I come back, I actually have not too much so-called internet thinking. I put the title here. When we say internet thinking, that means everything, the first term come to you is we can do it online. When I was in the state, in Ireland, when I go shopping, when I go maybe taxi, when I go to asking some food delivered, I will just call maybe. I will give a phone call. I will call a taxi come, I will call a restaurant, say, are you available? But in China, they all goes to internet first. I think during this time, because after 2013, I was not in China, but in these 5 years, even my parents, they're aged person, even some less well-educated person, the first term come to them is the internet thinking, which was very important. Like whatever they think is going to internet. I guess that's one background. And second is shifting wealth management. I learned from that as well. Like before I live in China for Ireland, I went to Ireland in 2011 or 2012. And before that, my parents, they all have their savings. I don't know, because maybe they want to save some money for me in the future, for my marriage or for buying home or whatever. But before that, they were all savings. And after my comeback, my mom spent a lot or invest a lot in P2P or peer-to-peer investments, something. And my dad do some invest on stocks using his cell phone. However, they all changed, and they all every time discuss about some financial products and where they can buy online, purchase online very easily. That's something changed a lot like that. It used to be internet, like bank savings, but then they go into the internet, like buying a lot of stuff. And final one is something we really in research we did, and we have a group here, research group with Rongda Chen, the dean of the School of Finance here in the UFE. And we discuss a lot of internet finance investor sentiment. When we say investor sentiment, we know some research from the Baker Wugler 2006. They talking about the investor sentiment and their impacts in stock market. So before that, we're going to know that not only in investor sentiment, but it's all impacts, the sentiment itself impacts by the internet finance. And the results of that are sometimes totally different from what we learned from those security markets. Here's the paper we did, and we also published in both Chinese and some English extensions versions. So if interested, we can discuss that more. That's some brief results, significant impacts on returns. So that's the second thing left for Chinese people, like we want to know that. And the third one, the last one we want to know is the massive amount of data. I did a lot of research, or sometimes when we're going to publish in English journals, I mean, using Chinese data, most time we'll be asked, whatever from editor like Brian or other reviewer, like why you using Chinese data? That's the first thing come to me. As a PhD myself, I was in asset pricing area. Then that time we always use in the States or some developed markets. So less people asked. But then when we go into internet finance, we're going to use Chinese data. So sometimes we need to explain why. But for this area, the first question we go is Chinese market has the largest sample of data, like the massive amount of data, whatever it's structured data or unstructured data, which was much better for unstructured data nowadays. Like, I don't know, have you experienced like some in these kind of figures? For example, the one in very left with the people in yellow and right, the electronic bike. It's a person, very special person or particular person who delivered the food for Chinese. It's come from Meituan. It's a Chinese company. And for that, whenever I order any food, for example, I order food after our talk today, it's about 9 o'clock or it's about 10 o'clock PM here in China. I order my food. Then they have a lot of data collected from me. Like I used to have this kind of food, it may gain weight, it's not very healthy. Then those kind of data may go into other research studies, right? Like the very bottom one, it's in Chinese, but it's actually explain some like fake news in Chinese report, financial reports. What they can do is they have a lot of data collections ways, and they can do new approach to investigate. Did they do some like fake reports, whatever, right? And nowadays, I don't know, have you experienced the same thing like when you're in Ireland? I never find that before, but in China now, when I have my phone I put my phone here beside me. But today, if I speak a lot of times with the same word, for example, I say island, island, island. Maybe in some of the part, like the searching machine or the shopping app, they may give me some like thing for Irish related, island related stuff. They collect data from me as well. They collect my voice, my sound data, and they can analyze it. So nowadays they have a massive data because of our usage of the internet. So that's the final thing left. Okay. So today we actually going to talking about fintech, and when I say the first question is what's left, because from that we're going to know the second question. Ask the second question is what's different. And I use the same title with the 7-year age, because we have experienced the 7 years from the internet finance, and it gives us a lot of research. And when we go back, we learned a lot. We have some lessons. But for the fintech, it's actually during the first 7 years. When we say that it's 2017 will be marked as the first year of fintech era in China. Why was that? Because in that year, the market size of the fintech companies surpassed the whole amount of those in the States. So most of people, they mark that year as the first year for fintech area. It crossed the internet area as well, but the finance area, but that year was the first. So now it's in the third year, fourth year. Does that mean? That means currently it should be the best period of the fintech. Then we, as a researcher, maybe we need to pay attention to, will that have a 7-year age? When should we reevaluate the fintech and its development? Currently, we all speak highly of fintech. That's very true, and we all experienced very good, like whatever for banking service, insurance service, security trading service, we experience very well now in China. But when will be the shift? When will be the turning down point? That may give us a lot of open questions. So today, as a very short talk, we probably going to ask some questions instead of I can explain some questions to you. Because currently, we even didn't find too many questions, too many problems yet. We are experiencing the good part of that, but we then going to ask, what's the difference? And will that have some problems? What should we be careful in the future, right? So the first difference we're going to know probably, it's also the same case search volume. But the first thing we're going to know, the first difference is now we turn to technology instead of financial modes, which was very true now. Whenever we're talking about fintech, we all goes to the 4 belonging knowledge, like technology. The first is big data calculations, whatever. Then second is blockchain. Blockchain currently these days talking about the Bitcoins or other like crypto coins, but they are not allowed to be traded in China now and most of the countries these days, right? So some people even know that. But the blockchain, which was the underlying technology for the Bitcoins, now has been used very widely. And in China, because in 2016, President Xi mentioned the blockchain a lot. So we have a lot of developments and new studies on blockchain. And the third one is like cloud computing, cloud computation or whatever. It links to the big data. When we have so many data, we have massive data, how can we compute it? The traditional way is not useful again. So we change it. And the final one is the AI. AI and big data, they can be linked to each other, and these two will be our main topics today, like to introduce. Why AI? Why AI? Okay, so the second is we're going to why big data and AI. That's what's different from the internet finance. Internet finance, again, I say it's basically on financial modes innovations, but now we're going to a lot of in technology part. So here are 2 words and 2 sentences very famous used, not only in China, in worldwide. Say big data boosts the AI. And the AI drives big data upgrades. How can we understand it? I usually use the Irish. I bought that from Ireland as well for my own baby. My baby is now in 2.5, like 13 months, and she always take the Aptmile from Ireland, and I have my friends send to me. So here, like just a big data, it's a infant, it's the baby infant, and then the baby who drinks that, it's AI. So from that, it gives to grows the baby, and then the baby used when she's growing up or he growing up need more data. I need more powder, milk powder, whatever in different grades. Right? I before that I didn't know that, but now I know there's a grade 0 to grade 4 now, and also there's an upgrade. Like see here, that's the blue bottle to the gold bottle. Some call that. They are more expensive in that, but because the usual ones has no longer be welcome again or popular again, then they're going to updated the big data or upgraded the big data. We say that, right? So that's a very like example how or what's the relationship between these two. And before these two, then we can have some examples where they be used, right? So I put the 3 of them like the industries. First is the banking industry. So like the banking e-commerce, which is a very tiny sample. I probably don't talk about like a textbook to give you introduction with the fintech plus banking. So I put very basic bank e-commerce as example. What's that? It means banks provide network business site for both parties of e-commerce transactions and self-management or constructions with third-party companies. But what's that? I can show some pictures here. Although they are in Chinese, hopefully you understand that. That's some of my own phones. I do the screenshot, and they all from the first one is the ICBC, the Chinese bank, largest, and even it's the largest bank worldwide, the top one. And all that's the construction bank, and that's the Bank of China. The 3 apps. 3 apps, they all have the second picture, like the right side. We can buy a lot of very like daily things from a bank app. I don't know, can you imagine that? At least I don't know what's that changing now, but at least when I was in Ireland, I use the AIB, right? AIB app, and I only use that to transfer money. And I never think about that they can do some online shopping from the bank app, right? Bank app. So why they do that? It's not their main business, right? The main reason to do that is they don't want is that sell goods. It's not their main business. Even they need to pay more, spend more in selling goods, right? And they earn profits. Not necessarily. They cannot beat those online shopping in China. We have too many online shopping malls already, right? E-commerce won't be the best for banks. So what they do, they master the end transaction data of the users. They want the users' data. And the last 2 was the most major reasons. It's the depict the individual or enterprise customers' portrait, and then carry out precision marketing. What does that mean? For example, my wife and I. My wife in charge of the whole savings of my family, right? Her account maybe has, I think about 1 million. I think I never know how much left in my own account, my family's accounts. But what she did when she have some credit given by the bank and ask or invite her to do some shopping, and he scanned on some bank app, but she scanned always some tiny stuff in kitchen or in washroom, bathroom, right? That's all what she looks at. So then they will describe or draw a picture for her. Say, okay, that's a lady has a big amount of saving, but spend only in very tiny things. So for this kind of person, they only asking for if they do the financial products or if they do wealth management, they're looking for very like guaranteed financial products, right? They need to say, for example, 4% per year annually, 4% annually, and they just a little bit higher than the saving rates. That's what they're looking for. But for me, in my account, I only have about over 10,000, 20,000 yuan in my account. But when I scan that, I always looking at some maybe high technology stuff like a laptop, a phone, or whatever. Then they will describe or draw my picture as a person has not too many money, but want to pursuing high value things. So always what I received from the bank, like messages or others, is, do you need some loan, personal loan yourself? Right? That's what they do to do the precise marketing. So that's the first using of the data and AI maybe in banking system. And second example of coming from insurance. Insurance, we got some IoT health insurance. What's that? That's a picture here as well. That currently what they do, because I have, for example, I have my watch, and right, and my phone and something else. So they will come to pick my data from my watch, say what's my heart rates, what's my temperature, what's my everyday's experience, what's my schedule, and am I a healthy person or not? If that, they will help the insurance company to measure and to also draw the individual health levels and then give the pricing and also do the carrying for the marketing, precise marketing. So that's a second using, right? I introduced the first very brief, very carefully, but seriously. So the second very briefly. And the final one is also a trading. I guess most people knows that this area as a financial students, maybe we do the robo-advisor, sometimes we call that. The definition for that, I searched this one from an English textbook, that digital platforms that provide automated or whatever, no human supervisions. That's what they're looking for, right? Some like robot. So the main benefits of that, perfect combinations of big data and AI in finance. They hugely use the data and calculate themselves. But the problem for this one is that it's like a black box. We didn't know that. And this one is particularly suitable in China. This year growing up very quickly, because in China there's a very good some characteristics of the Chinese stock market is the individual investors dominate the Chinese stock market. We have over about 90% accounts opened by the individual investors. But then finally, what's the benefits? Still the two to display individual investment preference to carry out precision marketing. So that's something we experience again. I do some stock investment myself. I just started as a new people. I started this May actually this year. And then when I use some app, I'm going to use their suggestions from the so-called the robot advisor app. But it's like when we go into that, it seems like makes us shifting from individual investors to institution investors, because for those robot advisor, they can have more information than individual investors. They can have very quick response or the right so-called no human supervision, so-called right, or we say the rational, right? When we in asset pricing, we say rational decisions making by themselves. So it's actually the benefits from institutions, right? We're always talking about why don't do retail investor or we do institution investor. We compare that. There's a larger amount of literature doing this research, but using robot advisor, it seems to change or to change the investment style for individuals, right? That's some changing from the fintech plus investments. Okay, here we described some questions for what's different. Then we're going to, in the second maybe 10 or 15 minutes, we're going to discuss some topics with what to be careful, or what should we, what will that be for fintech? We will think about when it's going to be more technology. Is there any technique bias, right? it's some research now going to discuss this. There's so-called the technical risk. Right? Even in asset pricing, there's some paper talking about that. But we can pick two maybe as example for the technical bias. The first one is the sample bias. Sample bias is often used in literature before talking about some matching when we do research on matching or when we collect sampling ourselves. But what's that in internet or in fintech? So here's a case that's based on the AI thing. See, here's an example in H1, H2, HM. It very clearly when we're going to HM, that should be very half and half for the yellow one and green one. But sometimes when we learn by technology or AI itself, what they can do, they can pick only the green one to us. They can pick only the green ones to us. This will cause very dangerous implications or applications in the practical part. We can go to discuss that. How would that impact us in the practical part? That's for some sample bias. That means every time when AI learned or be educated, they were going to pick up what they need instead of on average. So even it's 50-50%, but by using AI, it gives us about 100% maybe, right? So that's some in practice. What does that mean? That means, for example, here is a screenshot from my phone again. What's that? It's like the Meituan I discussed. That Meituan used in China. A lot of Chinese people here, they must know that. Meituan used in China is we probably, when we rate any food or any service after we take it, okay? That's one. But whenever I ask my friends around, maybe 1 or 10 of 10, or 9 of 10 of my friends asked, they never rate on that app. Myself, I never rate. So who rates it, right? That also gives us some sample bias. People who are going to rate it, sometimes it's too bad or sometimes it's too good. For the normally people, they don't rate it. So the data collections, the process itself have some sample bias. And also sometimes some of my friends told me they rate because the restaurant say, if you give me a rate of 5, I will give some discount to you. So they rate 5. That's another bias. So that's something can be changed before the data collecting. And if we base on the big data and AI, they gives us the wrong results most time. The second one is the overfitting. It's a very technical issue for overfitting. Here's some graphs. We have not too many time to explain that, but very clearly, if the first, the graph 1, figure 1, that will be the normally fitting line, right? When we say the linear regressions, we get a fitting line. But second and third, the second will be AI. It can learn well. It can go to very clearly, like the very tiny shifting for the lines. But what gives us the result is for the question 2, the figure 2, it cannot give us very clear expectations for the future. So sometimes when we go figure 1, we know sometimes it's not very clear, very correctly. We know there's some arrows, but it gives me some hint. It's going down. But in figure 2, it cannot give us anything we want, although it's very accurate, right? That's some problem of overfitting in technology. So that's very just 2 samples, and we have more technical bias, of course. The second more interesting part is going to discuss currently what's that in practical issues in China. There's a word called the profiteer on big data. What that means, it's in Chinese word, we call it 杀熟. And a 杀熟 case, what's that? It's, for example, I'm not sorry here using Chinese if some of you cannot understand it, but I can explain it. The first figure, the left side is if you buy the VIP account for some cinema. Like I know in Ireland, I went to Cinema World, right? Cinema World, I know some of you have bought that account. But if we buy that online, Then very interesting thing is the ticket price will be even more expensive for those people who bought the VIP account. Why? What's the reason? Because from the big data or AI tells the company that for the people who buy the VIP account, they much tend to watch the movies and more likely to watch the movies, right? Whatever the price you give, they were going to watch it. They were going to view it, right? And also they have a VIP account. They think they will have the cheap price. So never think about that. But for people, they never buy the VIP account. They are new customers and they probably won't come. So they need to give lower price for this kind of person. And that's very well educated by the machine itself. It's like machine learning. It's practical issues. And second one is, here we have a word called that's some paper we're going to discuss and maybe write in the future is, are we manipulating what you see, or do you cater your inner needs? Why I say these questions, because here's three symbols now in Chinese cell phones, very famous in cell phones. The first one is the so-called 今日头条. It's like a daily news, explained as daily news in English word. And second one is the Douyin. Douyin will be like a TikTok. It should be called a TikTok, right? In the Western, that's the international version for it. And the third one is the Dongfang Caifu. It's like a stock board, internet board online, who can discuss any stock informations and give you any very specific like informations or news for the stocks. Okay, why I mentioned these three, and now they are using the big data and AI process. How they use it? For either of them, for the daily news, for the Douyin, for the short videos, that you will be given those things you want to read. Right? For example, you read the funny things in these days, and the second day you will be received more funny things, funny stories. And the third day, more and more, and the fourth day, you reach all of them. Right? It's sample bias again. Right? You read all of them. But it's okay when you're going surface as the first two. When you're going to daily news, when you're going to the short videos, it's okay. I just go there for fun. I want to read or watch whatever I want to, but that not can happen in financial area, right? For financial area, we need to know what's the impact, what's the fact of the whole market, right? For example, I bought a stock A. It tended to, for any person differently. I'm a risk aversion person, so I want to read more like the maybe the bad news for it, right? The dislike news for it. So it comes to maybe just 50% good news, bad news. But when I go to read more bad news, it may second day give me 60%, third day give me 80%, fourth day give me 10%. So whenever I open the app, I will find, okay, that's all bad news. I cannot, or I should sell the stock I hold. I should do short positions, whatever. Right? It mislead my decision. But some people, they are risk seeking, so they want to know or they are overconfident. They're only looking at their good news, right? That's all personal. It's not necessary to be 50-50 again. So shall we give that rights in financial areas, like you can pick whatever you want, or you should be looked at only the real life, real world, how it works, right? So that's something may impact the financial investments from the big data and AI. Although we experience the very good things now, even in China or in world around, I think we only want to read those we like. And like, I think when I was in the island, I watched those YouTube, right? I use YouTube. YouTube is not allowed in China, but I use that. But then we will find, no, we cannot do that more. you will be suggested something you related. That's YouTube. That's okay in daily life. That's very good for funny. That's very good for entertainment, but that may not be good for financial person, right? When we graduate to any financial institutions, if we only look at the things we want to look, it may bias us suggestions a lot. Risk aversion people are going to be more risk averse, and a risk seeking person be more risk seeking or overconfidence. So that's something going to discuss, and probably in a short future, I may write a paper in overconfidence and like underreaction or overreaction or underreaction to news myself. Okay, so that's my thing, and about 40 minutes. And here's some references I mentioned in this talk. That's all from our group here, starting in ZUFE. If you want to read, that's some parts of our publications related to internet finance or fintech.